Welcome back to Liberty and Finance. We're delighted to have another opportunity to give you Ask the Brokers live. This is a live stream, not recorded. Well, you may be watching this tomorrow, but we're doing it tonight on Tuesday night, August 30th, 2022. And we have myself, Dunnigan Kaiser.
Elijah K. Johnson.
And I'm Kaiser Johnson.
And we are all family members, father and two sons, as well as licensed bullion dealers through Miles Franklin Precious Metals. We've been delighted to have opportunities to meet our clients and prospective clients and answer questions. Any questions you might have are good questions, because if you're thinking a question about what it's like to purchase gold and silver, platinum, palladium, coins, bars, whether you're doing it for personal holding directly in your own home, or whether you want to have it stored in the vault, whether it's for a precious metals IRA, if you're interested in questions about insurance, about shipping, about spot price, about packaging, about product selection, pricing, availability, anything that you're thinking about, probably hundreds or thousands of other people are thinking about too. So any question is a good question tonight. And one question I wanted to get right away on the floor, because it comes up almost every day, if not every week for sure, from different clients, is about what is the spot price. So many of our precious metals specials that we offer, we mention in terms of only $450 over spot or only $475 over spot, that kind of thing. And people say, what does that even mean? And then those who pay even closer attention start to ask, what does it really mean? Because they're watching various data feeds on the internet. Sometimes people go to silverprice.org or goldprice.org. Some people go to kitco.com. Other people go to their favorite online major dealer or the Gold Institute or whatever, and they're watching some data feed, and that may or may not, those all may or may not agree with each other. In fact, they generally don't. And then there's also this mysterious question of why some tend to run slightly lower or slightly higher than others. So there's a whole group of questions around that, and we want to very quickly address those tonight. And I'll toss out some little known facts that I learned along the way, some fairly recently, some more than a little while ago. And then my sons, Elijah and Kaiser, can add anything that they have also learned along the way about that. One of the things I learned first, because I asked our bullion operations head where we calculate our spot price from, and I was told, one thing you need to understand is that every dealer has their own formula for calculating spot price. There are several potential data feeds for that. Two of them that are used in calculating Miles Franklin spot price are the COMEX trade and the LBMA, the London futures. And there's a blend of those two in a formula that results in the spot price that's used. And now every different dealer or data feed that you look at may have a different formula that they use to calculate their spot price that they show you. So it would be more surprising than not if they agreed exactly. Most often they differ slightly. Another big thing that people don't realize is that precious metals, like all physical commodities, and frankly, like stocks and that are also traded on exchanges, where there's a bidding process. There's a bid and an ask. You have willing sellers on the one side who are asking a certain price that's generally higher, and you have willing buyers at another price that's called the bid price. So you have the bid price that's lower and the ask price that's higher, and there's this sort of this no man's land in between. And if nobody's willing to come across, if no buyer is willing to pay the ask price, or if no seller is willing to sell at the bid price, or if they're not willing to meet in the middle, no trades would happen. There'd be no liquidity as long as there's a gap between those two. That gap is called the spread. It always exists, and generally trades happen when you have willing buyers willing to go pay the ask price, or you have willing sellers willing to sell at the bid price. But what you'll find is that the notion of a single spot price doesn't have the complexity of, well, there's a difference. There's a spread between the bid and the ask. So you may be watching a data feed. Some of the most common that people watch are on silverprice.org, goldprice.org, or Kitco. All of those by default show you the bid. They show you that lower number, which I think is curious, because it seems to me that most people who are out there these days are wanting to buy metals. If you're wanting to buy metals, you want to know what they're selling for. If you want to know what they're selling for, what they're being offered for, you should want to know what the ask price is, not what the bid prices that other buyers are willing to buy for on the commercial metals exchange. So that's a couple points of confusion. Just to clarify again, Every dealer has their own separate formula, so spot prices are going to vary. Sometimes you'll see a live feed, sometimes you'll see a 15-minute delayed feed, so that will cause another point of potential confusion. There's also the bid-ask spread. It can be rather narrow, 10 cents to 12 cents sometimes on the silver. If it's a very volatile day, it can spread out to 15 cents, 20 cents, or even more. On the gold side, it can be tens of dollars between the bid and the ask on the gold price. So don't worry, your dealer isn't trying to pull one over on you. They're probably quoting you prices based on the bid price, and you are maybe watching the ask price. Now, I've understood that on kitco.com, if you go to their all metals page, so go to the main Kitco website, go to the all metals page, and then you'll see both the bid and the ask, not just the bid. Also, when you're selling back to a dealer, then you're a seller and the bid price is the one that will apply rather than the ask price, unless it's a swap, in which case they'll use a single side of that on both sides of the trade. So I know that's a lot of information, but I hope that answers some of the head scratching that some people have been doing of why different dealers seem to show different spot prices and why there's this difference of whether it's pennies or dollars. Go ahead, Kaiser, you had something to add in?
Two things. I forgot what the first one was, but the second one, I'll come back to that, I'm sure. The second part, if people want to see what the spot price that we're operating off of at any time, you can see it if you log in on a computer to milesfranklin.com. We have a live ticker of the gold, silver, platinum, and palladium spot prices any time of day. And so that's always live. So you don't have to try to add 10 cents into Kitco's price to try to guess at what our ask is going to be or that kind of thing. You can just see our spot price live anytime at milesfranklin.com, as long as you're on a computer. It doesn't work on the mobile site. You just need to do it from a computer. The other thing that has been coming up a lot recently in regards to spot is the question of melt price. And that might be worth just a quick mention. Essentially, melt is saying, what is the value of the precious metal relative to the spot price that's in that particular coin or bar or that kind of thing? So this last week we had a special on half ounce and quarter ounce coins. And so basically with a half ounce, when we're talking about price over melt, what we're saying is take the spot price, multiply it by the weight of the object. So a half ounce coin is take half the spot price. And then add the premium to that, rather than adding the premium to the spot and then cutting the whole thing in half, if that makes sense.
Yeah, one other thing that's not obvious to people is that just as on the stock market, the price, they say, Microsoft is at whatever, 128 today. What they're talking about is dollars per share. And if there were a stock split or a reverse split, that could radically change that number. There's been some stocks that have never split, like Berkshire Hathaway. So that's why it's over $100,000 a share, whatever. But most stocks that are growth stocks, that sort of thing, as they get more and more higher prices per share, then they'll eventually do like a 2-for-1 or 10-for-1 or whatever it is, stock split and the price per share. So with stocks, you're very familiar with that idea that it's always the price per share. So what is it in terms of precious metals? Gold, silver, platinum, palladium. It's always the price per troy ounce. I didn't make the rules. That's how it trades on both the COMEX and the London Exchange. When you have a price, that's what's called the spot price. It's always the price per troy ounce. Now, sometimes you'll see prices per gram and that sort of thing. So that can happen as well on other exchanges. But in the US, when you're talking with a US dealer about prices, it's always price per troy ounce. So what do you do about a product that doesn't weigh 1 troy ounce? Many of them do. American gold eagles, silver eagles, Canadian gold maples, American buffaloes, on and on. Many, many, many products weigh exactly 1 troy ounce. So it's easy. The spot price is the price of the metals that's in that product. But when you have a fractional ounce product, whether it's a half ounce, quarter ounce, 10th ounce, etc., then you first have to calculate the value of the metal that's in there by multiplying that fractional value times the spot price per troy ounce to get the metal value, and then you add the premium. And just a little bit more color behind what you had already shared there, Kaiser.
And I think now might be a good time to discuss those 1 ounce coins. As you mentioned, a lot of them are 1 ounce. We do have on special this week some 1 ounce coins, actually from almost all the major mints here, and they're actually at a quite a competitive price here. So what we have for a special right now is $4.75 over spot on the Silver Britannias, Krugerrands, Philharmonics, and backdated maples. So that would be from the UK is the Britannias. The Krugerrands are from South Africa. Philharmonics are from Austria. And then the maple leafs are obviously from Canada. And I think the really special thing about all these coins is they're all major mints. So there's 6 major mints out there that are extremely recognizable around the world. And all bullion dealers will recognize these. And I think it's really important to have something recognizable, if it's the beginning of a precious metal position. And even like local dealers often will only want like the most recognizable products. And this is a really great start, obviously, because they're 1 ounce. They say on there the fineness of the silver, and then also just that they're 1 ounce of silver. So I think one of the deals here also, I think, is the Canadian maple leaf, because those have been going at a lot higher than this. These are backdated maple leafs, but I think it is still quite a bargain here. But any thoughts on these particular products right now?
Well, that what you just said, I think is a really major point. Usually, the premium on Canadian maples is going to be 25%, 25% higher than on other coins from the other major mints, save of course for American Eagles, which have huge premiums. But and I think it's a really special opportunity to get maples at a really reasonable premium. And maples too, they're one of only 2 coins from the major mints that are 4 nines fine, 99.99% pure silver, just that extra purity that the Royal Canadian Mint likes to do with their products. In fact, they were the first 4 nines fine silver coin ever minted. So pretty cool there. But all of those coins, I hear people say all the time that the Philharmonics are just the most beautiful coin they've ever seen. Everyone knows the Krugerrand, from back when it was just gold Krugerrands, and those were the only face value minted gold coin. And then they started the silver Krugerrand in 2017, I want to say. And then the Britannia, obviously, the Royal Mint in the UK, highly respected, and a great coin as well. So,
and I think my personal favorite is the Britannia here, because it almost has like a proof-like look to it. It's a very beautiful coin.
Mm-hmm.
One thing I wanted to mention in addition was that the Canadian silver maples, so people are clear, these are the maples alone among these options are not going to be mint fresh. They're going to be, as we mentioned, backdated years, meaning that they may have been in our vault for some time, or they may be things that we've purchased back on a buyback or obtained through a secondary market, which means like from a big coin dealer or another wholesaler. So they are not mint fresh, but they are in brilliant uncirculated condition. And the Canadian Mint also, in addition to the 4 nines finest that you mentioned, Kaiser, is also renowned as being several years ahead of all the other mints in terms of their security features, the micro engraving, in addition to the large maple leaf that's very obviously visible on the main face of the coin. You'll also see a very small circle. It almost looks like a little trademark circle, but in that circle is a tiny maple leaf that's micro engraved. And in fact, the mint has what they call mint ID. So the actual fingerprint, so to speak, of the coin itself has been photographed under high resolution, and there are readers which, if you put the coin into it, can take a high resolution photo and check with the mint to validate that these are that came from the specific mint in a specific year. So the security features of the maples are renowned to be second to none in the world. And the other thing to be aware of that we learned continue to learn about brilliant uncirculated condition is that due to silver being a precious metal, but not necessarily as noble a metal as gold, for example, which gold cannot tarnish, silver can. And so you want to make sure to try to maintain these in a dry temperature. Try not to touch them with bare hands. and try, if you can, keep them in the sealed mint tubes where possible, because that's tends to protect them from moisture and that sort of thing. But that there is possible, even with mint fresh coins in brilliant uncirculated condition, to have some amount of either patina or toning, it's called, that can start sometimes with a yellow or can go into deeper colors as time goes by. And that can happen from any mint, and it can happen at any time. But that's just part of the fun of silver, and it does not change the value of the coin. It doesn't change the amount of silver. The silver content is still exactly the same. And just like your grandma's silverware had to be polished from time to time, you do not want to polish a silver coin, because that polishing usually involves scratching. You don't want to do that to your coin. So you just let it happen, but try to take care of these as much as possible by keeping them in a dry environment, and try to avoid touching them with bare hands.
One thing I did want to mention, just as a point of clarification on the maple leafs, the radial lines and also the micro engraving are on maple leafs from 2014 onward, I believe is the year. And so these are backdated, so they may or may not have those specific features. However, it doesn't typically impact resale value, whether it has the feature or not, when it's backdated. So just a clarification on that. And if you do want to guarantee the radial lines and the micro engraving on the maple leafs, just purchase the 2022 ones and feel free to just ask us for the pricing on those. But yeah, so I guess as for the next topic here, I guess as we're talking about premiums and specials and everything like that, we do have a question from a viewer here. It is, do you ever see premiums reverting to pre-pandemic percentages? So kind of just to give context here, back, a couple of years ago, before the COVID-19 situation, you could purchase silver eagles often for, $2 to $3 over spot. But at the moment they're, $13, $14 over spot. So we've seen this incredible inflation of the premiums because there's been so much demand for silver since the beginning of the crisis there. So will it ever let up? We don't know, obviously. I will say that there has been fluctuations in the premium. I believe we had the silver eagles on special a while back for, $7 and change over. But it's remained incredibly high over this whole period. So, there's no letting up right now, and demand has been incredibly strong as well. But I don't know if Kaiser or Denigan, if you had any thoughts on that.
Well, the first thing and I don't mean to be lippy about this, but the first thing that occurred to me was, will life ever return to pre-pandemic conditions? Ever since 2001, ever since 9/11, we've never gotten rid of the TSA or any of those restrictions that were in place. And it just seems that in many ways our lives have ratcheted to where there are more controls, and there's more loss of many aspects of privacy or freedom or constitutional rights. So that's what my mind went immediately to, is when will premiums return to normal, is when will life return to normal. So, but that, you're right, that's driven by a completely different factor. Although I think there's a relationship, because people observing that life isn't normal anymore wakens them up. And then that's what's driving this demand. And you mentioned the demand has far outstripped the supply. And in fact, that's in some ways getting worse, because the U.S. Mint is continuing to announce partial shutdowns or reduced output and that sort of thing. So in many ways, especially for the U.S. Mint, but to some extent for all the other mints, the amount of supply has been constrained, but the demand has been off the charts compared to the past. Kaiser, you were going to add something?
I was just going to say that, yeah, while none of us, can predict the future, and while we've seen some fluctuations in premiums and that sort of thing, I personally find it hard to believe the idea of, we'll be going back to paying 97 cents over a spot for any silver product, anytime ever. I look at, I remember, when I was a kid and first saw this, I don't remember what the preceding event was that caused a big surge in gas prices, but it went from under $1 to like $1.30, and I never in my life saw it under $1 again. I guess I think of that in terms of silver here. There's certainly in our future, both looking at silver both as a monetary metal and also as an industrial metal, that there's certainly no lessening of a demand for it in terms of an industrial component, and particularly the more that we as a society invest in infrastructure and technology and green technology and that kind of thing, there's high demand for silver in all of those categories, and all those are categories that are growing at exponential rates. And so the idea that, oh well, now we'll just go back to something where the premiums go down, it's hard for me to believe. I'm sure it's possible, but I don't see quite what would need to happen to make that become a reality.
Mm-hmm.
We have another question for a viewer here. I'm not sure I have too much of an opinion on it here, but I definitely like your thoughts. So with the viewer says, with American Silver Eagles and 90% junk silver premiums sky high, what are your thoughts on American 40% Kennedy halves? And so this is actually a very interesting question, because from 1965 to I think 1969, I believe those were the years there, Kennedy half dollars were 40% silver. And we do have them. I've actually never had a client ask about them, but it definitely is an option, a very, very low premium on those. One of the things I would have reservation of those is maybe not everyone will know that they're silver. If you're talking about, if you're concerned about U.S. minted product, in a worst case scenario, U.S. minted product will probably be the most recognizable, the American Silver Eagles junk silver. Will the 90% silver halves be recognizable? I'm not sure. The other thing is, I think you're sacrificing a bit of quality there, because, if you're going to be selling them back in the future and someone's going to be like refining them, it might be a bit harder to do that because it's just 40% silver. So you're dealing with something that's not even half silver. So I would say, you're probably sacrificing some quality there, but it is a U.S. minted product. So I think that's a good point from our viewers, and premium is extremely low on those. So any thoughts from you guys?
Well, we always, I know when people ask, well, I always do say, our lowest premium is on 1,000-ounce silver COMEX bars. But it's actually not true. The lowest premium is on 40% Kennedy halves. I think last time I checked it was. But it's you're right. I think I've only ever sold those one time. I think you're right on the things you mentioned there, is that, common knowledge, what most people know is that silver coins stopped in 1965. And so it's certainly the breadth of people knowing, yes, this is a silver coin, is going to be much smaller amount if if you're trying to sell to a secondary or barter or trade with it or that kind of a thing. So I think you're right there. But boy, that is an appealing premium. So
one thing I wanted to add, if I may, is that it's an evidence of, I think, something that's a phenomenon that's going to be happening a lot. And that is that as the most popular and most desirable things get consumed or grabbed or bought or purchased or taken out of circulation, then people naturally are going to look around and look at what's the next tier? What's the next tier that's available? I mean, in any town that gets developed, the choicest real estate goes first, and then out it goes, and pretty soon they're building right alongside the highway and that sort of thing. What Andy points out is that if you put, a bucket of ice at a party and you put brand name sodas out there and then some generic, whatever, Sam's Club sodas or something, they'll wait and they'll wait and they'll wait and they'll finally go at the end, because people will always have a preference. If given the preference, they'll go for the thing that's most recognized most. And so now I'm going to put on my preparedness hat and say, in a preparedness scenario, you can still take two minds on this. Some people feel very clever by knowing that these are not under the crosshairs of most people's attention. So they'll go fishing over there in this little side water where they think that they can find extraordinary values, and that may be true. Another example of that would be like the 20 franc gold rooster coins and other Swiss 20 franc rooster coins and that sort of thing. You'll find that those are lower price for gold than most modern bullion coins. So if you know where to find these little niches of value, you really can find some exceptional values. The question is, then what? What's the next move in your chess game? Because if this is where my preparedness part comes. So you found this good value. Now who's going to trust it? Who's going to recognize it? Are you really going to want to have to get into an argument with somebody that yes, it really is 40% silver and you should trust it because it says right here on this piece of paper that whatever. So if you're having to convince someone in the future of something that's not obvious, not common knowledge, they may insist on a discount. They may say, well, you say it's 40% silver. I'll pay a half of what, that kind of thing. So it may be that you find yourself not able to capitalize on extracting the value of that you hoped you could. So always try to think scenario planning ahead. How am I going to be able to use this? What's the end game? How many options? What universe of potential trading partners? How much flexibility? How much optionality does this give me? And choices that inherently limit and restrict your number of options are in some ways really less valuable because they just simply aren't going to provide you with the same ease and smoothness and flexibility, especially if times get tougher and people stop trusting each other quite as much. And you don't want to get into an argument with someone who doesn't recognize what it is you have. So that's just some food for thought from a preparedness standpoint.
And it might make sense that in that regard that, I know we've talked to people frequently about the idea of what are like things that are very important to have for different scenarios. And then when can you just fill out your stack? And it might be something where, again, we don't offer financial advice, but in the idea of it's important to have recognizable stuff, and it's important to have, junk silver is nice. It's very transactable and that kind of thing. But that 40% silver might be a good way to fill out your stack and get a lot of ounces, even if they are 40%, for a very low premium. So yeah.
We have another viewer. We have another viewer's question here. What dollar percentage are you selling of silver versus gold now? I haven't done the math on that. I haven't run the statistics and analytics, but what I will say is the last couple days of last week, I think it was Wednesday, Thursday, Friday, was incredible demand. I would estimate probably did like 20 to 30 orders. And I could count on my hand. There were probably like 3 or 4 that included gold in there. So vast majority silver there, I would say.
Which ironic.
Go ahead.
I was going to say, just ironically, that's kind of the opposite of what I was saying in the beginning. Is usually in most starts of a bull market with precious metals in an inflationary period, people go to the most talked about thing first, which is gold. Gold is the go-to, and then silver eventually catches up and passes gold on a percentage basis because it's such a small market that it just can't hold that much capital investment into it. But gold is usually the thing that grabs people's mind share first. In this case, because of the compelling gold-silver ratio that's been driving people, if the 200-year average is 40 to 1 for gold price compared to silver price, and now it's about 90 to 1, that it's just been really pounding on people's minds who are at all interested, even though it's a small percentage of people, that silver is the value right now. Silver is the value. And that seems to be turning the tables on what would typically have been the gold being the go-to and silver being the sort of the poor man's alternative you could finally have to resort to buying once the gold's all gone. Right now, the gold's actually in better supply in some ways than silver. Kaiser, you had something to add?
Yeah, and I would say, I guess, while what you say is true, Elijah, certainly the if you just look at the volume of ounces, or even the number of orders that contain gold or silver, I would certainly say, far and away, 95% of the orders that I do are just silver. Or that kind of thing. But what I do find frequently is that a number of that generally my gold buyers are spending much more than my silver buyers sometimes, and so that the dollar amount does, I don't know if it certainly doesn't even out. Certainly silver is more, we're selling more in terms of dollars in silver than we are in gold right now. But yeah, I would say it's a much closer, I would say it's probably 80-20 or 70-30 in terms of that. That's just me ballparking it based on, I haven't crunched the numbers as Elijah said, but just because of how much more is spent on gold when people are coming in and they're buying gold. So.
And I think that that's an interesting point you make there, because that's definitely the case. If you have $100,000 order, it's very rare for it to be all silver. It might be mostly gold there. But that maybe gets to the point of that silver is so hard to store, when you get to those large dollar amounts there. But I just think that's so interesting, because it's like, if silver becomes so valuable in the future, right? That, on people start investing in silver, large amounts of money. It's like, that's such an interesting thing. It's like, doesn't that just say, oh, I can get a lot more silver at this point for my money?
Yep. And that is a consideration for some people, the storage volume that you mentioned, because some people are just astonished when I tell them, they say, well, I've got this, like, pick a number, $20,000 or $30,000 I want to put into metals. And when I tell them, well, we could sell you gold and you could hold that in the palm of your hand. They're, what? Yeah, you could. So where am I going to put it? You could put it anywhere. You can hide something that small anywhere. But if you're going to do it in silver, $30,000 is 2 large shoe boxes that each weigh 40 pounds. And you need to think about where you're going to put those, or subdivide them and put them all over the house or whatever. So it's a very different logistical proposition for people if they're thinking about larger purchases in silver. It's true. The storage is a factor. Any
Definitely
other
very
viewers'
true.
questions? Yeah.
Yeah, and I think, that also, I guess, gets to questions about storage then as well, because, not everyone wants to store a whole bunch of value in their home, obviously. So there are storage options that we have. And I think one of the things that is really interesting is for, I believe, both our storage options, but especially in North Dakota, is the price difference between storing gold and silver is actually very minimal. There, it has to do more with the dollar value, and there is just a slight basis point difference per year. But I think that's a fantastic option if you are looking to invest a lot in silver. The storage options are pretty similar when it comes to storing, $100,000 worth of gold versus $100,000 worth of silver.
Yeah, they're both a fraction of a percent per year. That's a good thing to keep in mind. The cost of fully insured, allocated, segregated, audited, and guarded storage is a fraction of 1% per year. And the gold fraction is smaller than the silver fraction because the silver just takes up more room in the vault. It just does. They just can't fit as much in there. So it does cost a little bit more per ounce overall to store silver. But they're both a fraction of a percent per year to store.
Speaking of storage, one question that I know I've actually had people call and ask me recently is, and it's a slightly uncomfortable question, but Elijah, I think you've handled questions about it pretty well before, and this is the answer I go to with clients who are asking it. Is they're saying in a situation, if FDR was president again and it's 1934 and they're nationalizing gold, you've got insurance against all these things at a storage facility, but is it insured against government nationalizing metals and that kind of thing? And the short answer is that no, there's no one will insure against a government nationalization of metals. But one thing I know, that Elijah, you've pointed out is this idea of confiscation that I think, certain companies who have a vested interest in selling you high premium numismatics really try to scare you with the idea of your gold's not safe unless it's in these kind of things. It's in pre-33 things and that sort of thing is that they're ignoring the idea of why it was confiscated in the first place. And that was, Elijah, as you pointed out, was we were on the gold standard. And so the only way to inflate the currency was to get more gold and then change what the ratio of gold to dollars was. And that was the reason for doing it in the past. And so, that doesn't fully get rid of the question of, well, how can my silver and my gold be perfectly safe? Because the answer to that is it can't be, no matter whether you've got it at your house or in your backyard, or at a vault or that kind of thing. But it does, I think, help, at least for myself, help ease my concerns about that sort of an event when it comes to the fact that I have a lot of precious metals in storage and don't prefer to keep all of them at my house.
Mm-hmm. Yeah, and for many people, that's the place that they might land in the end. Most people, when they're just beginning and don't have any precious metals and are just getting their first physical precious metals as a tangible asset, usually they would want that shipped directly to them because they want to have, for example, constitutional 90% silver on hand as emergency silver for bartering, that sort of thing, or some gold as a savings account, just to have something that's tangible, solid, and isn't going to be spirited away by inflation next year, that kind of thing. But then after people have been accumulating for some time, especially dedicated stackers who just keep plugging away, week after week or month after month, eventually they might reach a point, and they do, where they say, I'm just not comfortable having more than what I currently have under my roof because I'm not home all the time and I'm not here to protect it always, and that sort of thing. So they may want to have some additional but they want to pull some funds out of the stock market, or they want to take some funds out of the bank because they know from the Dodd-Frank Act of 2010 that whatever's in the bank isn't yours, really. It belongs to the bank, et cetera. And they want to protect themselves, but they're not necessarily comfortable accumulating yet more at home. So a vault is a really good solution for people who either are doing that or who have rolled over from a big 401k or IRA where you need to store it in a vault, or if they've got an inheritance or they've just sold a large property and they have a big incoming purchase of metals that they don't necessarily want to have to manage themselves at home. So it is reasonable to pay a vault to guard your stuff for you. It's a perfectly reasonable solution. And you're right, we don't live in a perfect world, and no one can guarantee you what the government is or isn't going to do next year, month, week. But we all try to do the best we can, try to be responsible, try to be prudent. That's what this is all about, is trying to take care of our family's financial futures. How are we doing on time? 5 more minutes, looks like?
Yep.
Yeah, definitely. I think we do have a few viewers just tuning in right now. So I'm just going to, for those who weren't here before, I'll just share the promo this week. So we have the Silver Britannias, Krugerrands, Philharmonics, and backdated maples for $475 over spot. I think an especially great deal on the maples there. They're typically a lot higher than that. And so these are 2022 for the other coins and then backdated for the maples. And these are all major mints. They're 1 ounce coins, at least 3 nines fine. The maples are 4 nines fine there. So I think a fantastic opportunity, for people who are just, starting their stack of silver to get something that's very recognizable. These are all some of the most recognizable mints in the world there. And I think to answer the question as well, I mean, we talked about a little bit about confiscation. David Morgan, I think, puts it very, very clearly that, well, your wealth is being confiscated right now if you hold dollars. So, we can't predict the future, but the best thing we can do is reduce our risk. And one of the best ways to do that is to hold something of real value, physical gold and silver. If the government decides to confiscate it later, well, we can't predict the future for everything. But one thing is for certain is the government is confiscating wealth right now if you hold dollars. So that would be the last thoughts that I'd have. But any other thoughts on the promo or anything else we discussed, Denigan or Kaiser?
Just one more point on storage. It has to do with what you just said, Elijah, was if you have anything in the bank is not yours, that includes dollars, but it also includes anything you have of value in safe deposit boxes in the bank. The contents of safe deposit boxes, just like the contents of checking accounts, savings accounts, certificates of deposit, and any other deposits that you have in a bank in the US, are not your private property. They're not your legal property. They are the property of the bank, and you are an unsecured creditor. You put that on loan to the bank, whether you know it or not. The bank, as of the Dodd-Frank Act of 2010, has the right to draw on those valuables as operating funds, and you may be issued shares of bank ownership in exchange for those. So if you don't, so in other words, one of the worst places, if not the worst place to store precious metals is in a safe deposit box in the bank. I would recommend people just don't do it. Find a better solution than that, because that is a place where if you put them in there, they're no longer yours legally.
And to clarify, we do have a very special safe deposit box program through Brinks
Of
which is not a
Toronto,
bank.
non-bank,
Yeah.
private safe deposit box, completely
Yeah.
different. That's right.
Right.
Fantastic. And we do have one other question about the pre-33s. What is our opinion on the pre-33s? We sell them. We can get pretty much any grade you're looking for. Just give us a call and we'll let you know our inventory. One thing I would say is the premiums on the pre-33 gold coins are higher. And if you're going to be investing in them, I'd really recommend before purchasing them from any dealer to do your own research, figure out what the right value is on them and everything like that. Because a lot of dealers, it's notorious to really overcharge for very high premium coins or high grade coins, and then push the idea that these are non-confiscatable. The government can do anything it wants, and they can confiscate any sort of precious metals if they change the laws, right? So at the end of the day, having pre-33s, I think, gives you more options for, if there were going to be policy decisions in the future, it gives you a little bit more diversity that maybe they won't confiscate that, like kind of collector coin or something like that. But do your own research. Don't trust us. Don't trust any other dealer with respect to that. Just do your own research and then let us know. And we'll also let you know how much of a premium you're paying compared to the gold price. Because I think that's the biggest thing to recognize, is to not pay too much more if you really are looking just to invest in the gold content. All right. Well, yeah, thank you everyone for joining us today for this Ask the Brokers Live. Let us know what you thought. If you do have any other questions, put them in under this video. We'll hopefully answer them there. Yeah, and just thank you so much for joining us today. And thank you, Kaiser and Dunnigan, for doing this today.
Yeah, special shout out to everyone who did ask a question tonight, because you did a service to everyone else who was wondering the same thing or a similar thing. And by getting it answered, you helped a whole bunch of other people. So hang in there. We'll do this quite often, guys. So I'll be happy to see you back for the next Ask the Brokers Live.